And a lot of students were interested in getting some advice for you on how to start a fund in the future. So, how do you initially raise capital for the fund apart from the 0.25 fee structure that you highly recommend if you do not have, let's say, relatively rich friends and family to raise it from? And also, how much capital do you believe that an investor would need to start a hedge fund today or to manage their money full time in the US?
Okay, yeah. So I would say that before we get to the raising a fund question, what should have happened before that is 10 years or 50% a year. So if you, for example, had very modest amounts of capital, I don't know, 50,000, 25,000, 10,000, for example, at 50% a year, it becomes a significant number. So if you have $10,000 and you haven't been able to do, 30, 40, 50% a year for a long time, then I don't think you should even think about a fund or anything. And the second is that if you've got an engine which is getting you those high rates of return, the power of compounding is such that if you never raised the fund, you would still be enormously wealthy. So I think the first criteria to getting into the fund business is you should already be independently wealthy. And if you are not already there, it means that something's happened in the past where it hasn't been proven that you can do this. Now, if you're already wealthy, then I think you focus on the friends, family, and foods, especially the foods. Okay. And Buffett says that if you have a great track record, they will swim to you in the middle of the Atlantic in shark infested waters to invest with you. So if you have done well, people will find you. And so you don't need to be great at raising capital. You need to be great at pounding out great returns. If you pound out the great returns, everyone's looking for those managers and they are trying hard to find you.